Stock tip. Best stock setups.
Hi, and welcome back again. I'm Marcel Todi, and this is the latest episode of Stock Tip Daily Update. So let's just jump into it. What happened today? What happened today was that the markets just got erased, so to say. This was the last distribution day we've seen in this series of 1, 2, 3, 4, 5, the fifth day so far, not counting the four before. The markets have just taken a major hit. In the beginning of the day, you see here in the 15-minute chart, we've started the day with a gap, and I personally thought that we would, after this gap, that we would get a bounce in the market, a bounce to the 9-day moving average, or possibly to the 20-day moving average, and at that time that would have been the 461, respectively 465. Now they are pointing down. Back to the 15-minute chart, that wasn't the case. We've had a pretty good start here. A nice green candle, and then a little consolidation just above the moving averages, and then breakout, and then followed by this consolidation, but this here failed. So with the breakdown, we've lost all of our momentum, and the markets closed here. So here actually, and you see here post-market, we are actually worse than the closing time. I was because I was convinced the markets after this gap, the markets would make a bounce. I actually managed to buy a nice long position here in the SPY and in the Nasdaq. I will show you. I will show you what I mean. I had my entry here and my stop here, so this was my risk, and it was going very nice. It was going wonderfully, and the consolidation, and then the breakout again, and the continuation, and I still thought we would get this bounce. It was actually going all everything just like we've planned, and then with the breakdown, actually the breakdown wasn't that obvious, but then we had this little rally here also with some volume, and at this point I got a little scared, and I've taken my profits, which I should have taken here, but I did take them here, and it was still about this line, so still more than 2 times my initial risk, so still not bad. And it was good that I did so, because after that we've got the next big red candle, which totally cancelled our momentum here, and that was followed by all of these red candles, a huge series of red candles, uninterrupted series, which you don't see very often. Normally you have 1, 2, 3, 4, 5 or so, then a couple of green ones, and another 3, and then a couple of green ones, like we've had the whole way down here. So a couple of them, 1, 2, 3, 4, 5, and then a couple of green ones. But what happened today was a sell-off, a really ugly sell-off. And this may just turn into a little more than a correction, but into a crash, considering how the Nasdaq is doing. The Nasdaq has made a lower low, and then followed again by a lower high, and then a newer lower low, and we still don't know if this is the last low. If we take a look at the measured movement here, perhaps we've hit our target now. It sure seems like it, but in such market conditions, you never know. So in such market conditions, it's dangerous to presume anything. It's good to have a backup plan. My backup plan was here, was initially, but I still thought that I was cleverer than the market. My backup plan was to pull my stop. Here. I didn't do it, but finally I did close my trade here, so not a biggie, still in a profit, still with a nice profit. The Nasdaq unfortunately didn't go just that well like the SPY. The Nasdaq left me with a small minus, so this was the Nasdaq. Also a buy here, not just not quite here, so a buy here, a stop here, and then this was followed by this ugly movement, and I didn't get that far with a Nasdaq, so I didn't bother pulling my my stop for that low of a risk, and it doesn't matter. At the end of the day, I'm still 1% in plus, so everything ended well. 1% whole portfolio value in plus. You see here what I meant. So it was all going well. This was the resistance line, and today we've broken out of the resistance line, and then we consolidated above the resistance line, and we've broken again out, and then it just went south. We didn't have any momentum, so such a move won't come anytime soon. So I don't know. If it comes tomorrow, it comes tomorrow, but it's certainly not something that you can predict in these market conditions. We'll just wait and see what happens. Officially, I am now only with one position in my portfolio. My ENVA also got closed today. This was my ENVA. Also got closed, touched the stop, and I remain with IRTC. I've also pulled the stop here a little higher. I think at the moment it's at 117. I don't want to lose the whole way down, and I will leave it a little more room, but I also believe that this is going to go south. If the whole market's going south, then everything is going south. You may take a look here at all the sectors, but before that, the small caps also look catastrophically. We've broken through the last support line, and the measured move is not yet completed, so it just looks bad. So this looks like the third part of a trend, and this looks like the fourth part of the trend. So this is normally a descending trend, a falling trend, and somewhere here or here we'll have a new accumulation phase. But for the moment, I think it's just a hunch, but I think the markets are going to go a little further south than initially anticipated. The DAX has held on, but tomorrow I expect to see a movement, a corresponding movement corresponding to the other markets. So I won't be surprised if we open the DAX with a gap down. Euro to US dollar. That's why I finished the day in plus, one of the reasons, and this is it. I've hedged my portfolio. My portfolio is evaluated in euros, and now I've exchanged it all for US dollars, so my whole euro value is now a lot higher, about 0.5% higher because of this hedge. So if it continues going down, and it will continue going down for a while, then I will just sit on the bench, sit on the sidebar, and just rake in the profits alone from this hedge in the euro US dollar. I don't need anything more. I think I will try one or two things, short here or short there, if it's possible. Then long on a bounce in the SPY or in the Qs. But even if I don't, I think I will still get a couple of percentages here, so 2 or 3% along the way alone through the euro to US dollar. I wanted to show you how the market is doing. So the oil sector is consolidating. I'm curious to see if the oil will survive this this massive move in the markets. Gold has reached this support line I was talking about yesterday, this resistance line I was talking about yesterday, and turned around. It actually made a little outside reversal here, so not the best of signs. We shall see if this is only a consolidation here just beneath the support, the resistance line, or if this is a bounce back. Silver did a lot better, opened with a gap, but ended the day with a shooting star. Now we shall see if we manage to hold above this now support line. If not, I personally think we're going to test the 20 again, but we shall see. So pretty much every sector, the financial sector, got a hit. The electro, autos, this is the solar sector, solar energy, minus. Ended the day in minus. Global lithium ended the day in minus. Jets ended the day in minus. Semiconductor, very huge minus here. I think this is yes, 3.5%. The biotechs ended the day in minus and are on a descending trend here. So pretty much everything is going down. So communication sector going down, basic materials just above the support line, but with a major negative day, almost 2% in minus. Consumer defensive, also the defensive sector, so defensive titles underneath the 50-day moving average. Even defensive sectors don't hold up in a sell-off, in a recession or a crash correction, may be it as it may. Not even the consumer defensive sector will hold up. What do we have now? We have the bonds. The bonds are also on a descending trend, and agriculture. Agriculture is still kicking. So I wanted to show you pretty much every sector is on a downtrend, and that means that's most probably the direction the market is going. Do I regret now selling my shorts in this, so closing my shorts in the SPY and in the Qs? Actually, I don't regret it at all, and there is one simple explanation for that. First of all, the technical analysis was pretty spot on. We've opened the day with a gap, and actually went up the first half of the day. And not only that, but half of my short position was protected with a stop here, and this stop would have been reached today, and I would have closed half of my short in minus actually, and the remaining position would have brought me a little profit, and it would have ended up in perhaps plus minus 0, so it wouldn't have made a difference for me. So I definitely don't regret it. It was based on the technical and the right technical analysis. Take a look here. We've opened actually with opened 0.5% in plus, and that would have erased a huge chunk of my profits which I've taken here. And the same story goes in the Nasdaq. Nasdaq actually opened a lot higher than and then the SPY, the Nasdaq opened 1% higher or 1.2% higher. So this would have gone that well for me. And this is the same story here. My stop would have been touched, and I wouldn't have been too happy about it. So I definitely don't regret closing my shorts. It was the right decision at the right time. And then I was asked, why didn't you just short the market here? Because I didn't see a trend in it. I didn't see any setup, any right setup. I needed a setup with a good entry. Here I didn't have any good entry. This isn't a good entry, not good enough for me, and the SPYs are looking pretty much the same. I didn't have any setup here, so no possibility to go in, and the rest of the day, the rest of the trading hours, they were only red descending candles, no possibility for a setup, for an entry, or for a stop. That's why I didn't do anything, and I think that's the way to do it. If you don't have a setup, you shouldn't do anything. What would happen if I entered the market here? Perhaps we will open tomorrow with a gap, and even if not, I open here, and my next stop should be here, so I can do absolutely nothing about it. So my stop would be at a distance of almost 8, and 8 is huge. 8 is huge. I need 8. Look, these are only 5, so I need such a candle. Actually, 2 of them to make profit. So if you're starting from here, I would need 2 of them to be able to take my first profits, and this is almost our target here, where we expect a correction to at least to take a pause. So pretty much not worth it, not worth trying, not for such a risk. If the risk was yay high, then definitely. If we had here such a setup, I would have definitely said yes, let's go for it. No, I still don't think I would have said let's go for it. I still would have thought we are above the moving averages, and as long as we are above the moving averages, I would have waited for a move down, and then such a movement, a move down, and then the next bounce out of the moving averages. So this one I would have taken with a stop here and an entry here somewhere. So such a setup I would have taken, but definitely not this one. This is no setup. In the long run, you will just lose money with such entries. Then you remember I've talked about Apple yesterday, and I've also posted the setup on our website on stock-dip.com today. It was about the head and shoulders formation you see here in Apple, and I wrote in the blog or in this blog entry where we would have a nice stop here for Apple, and I've said one possible stop would be above yesterday's candle, and by that I mean this one at about I don't know, 172, perhaps 172, and the other stop possibility would have been 178 above this little pivot. Because I was expecting a little bounce in the market, and I still do, as I think a bounce is imminent. I didn't want to take it for myself. I've also written this on our website. You should go take a look at the setups there and the last trades we did, stock-dip.com, don't forget. You also find a link in the description beneath. And I am interested in such a setup. So a breakdown, a pullback to this line, and after that I will if Apple turns again like this, I will definitely take it, and then my stop will clearly be here with an entry here somewhere, or at least I hope. It's just a matter of how this title is going to evolve. But this is something I would go for. I wouldn't go for a direct head and shoulders formation. I would go for a pullback and then another breakout. This is something I would go for. But just to show, this is just another setup that is going well, even in this crash or mini crash. You can still find good setups on our website, and the next example would be MGI. I've given you MGI, or I've mentioned MGI in the daily updates last week, and take a look at that. This is the confirmation of yesterday's breakout, and this is today's candle. So hoping 8.6% today. Considering the sell-off today, I would say this is huge. Actually, you could have taken your first profits today at the peak of the candle, and you would have been in the clear. This trade wouldn't have gone south. And another setup I've given you was Azul broke out today also with above average volume. So I personally am not a fan of any swing trading in these market conditions, but I've still search for setups for you, and just take a look at it. The setups that have broken out, the ones that do have broken out, they're really going, and the next candidate is actually CTXS, also a really good breakout in our consolidation here under this mother bar. This will be an inside candle if it holds, I don't know, but also a setup that has broken out and has held. Pretty much everything that has broken out has held. Here, take a look at this one. Pullback, I've mentioned it here in the daily update, pullback, and another breakout. And if this was your initial risk, you wouldn't have needed you wouldn't have needed anything else. So if this was your risk, sorry for that, I can't draw it straight. If this would have been your risk here, you would have already made so this was your risk, you would have already made 1, 2, 3.5 1 to 3.5 risk reward ratio. So consider that for good setups. Yeah, now I think this concludes our discussion section. So if you did like what you've seen, remember to like and subscribe. If you have any questions, write them in the comment section. Don't forget to visit our website, stock-tip.com, and take a look at the setups there, or the last trades. I've updated the site today, and it now includes a gallery with the latest and best trades we've did this month. I would like to mention our portfolio is 11% in plus in the last month, since the last week of December. So this is a performance during this crazy time. If you take a look at the SPY, this was the last week of December here, and SPY has plummeted pretty much 7%, and the Nasdaq is catastrophical. The Nasdaq has plummeted 10%, almost 11%, and we are up 11%. So how's that for a performance for you? One last thing, remember the main position to be held at the moment is cash. Cash is king. Okay, thanks for joining me today. See you next time.